Tesla's stock price is currently at a low point despite the company's record-breaking Q4 earnings for the previous quarter. Tesla has certainly been having a complex trading period, which is largely overshadowed by Elon Musk's drama with Twitter. The EV maker had capped off 2022 by doubling down on discounts that it normally never gives, but this has not kept its stock price from dropping. However, Tesla is not the kind of company to be judged only by its stock price, and there are several growth factors that many analysts are not factoring into their predictions. Hey guys, welcome back to Tesla Tomorrow. According to recent news, Tesla is planning to build a full self-driving vehicle that could be sold for less than $33,000. Tesla's fully autonomous driving technology is currently in the beta phase, but some analysts believe that the car company can produce a car that can run the full self-driving software, or FSD, for less than $33,000. A Tesla influencer named Whole Mars Catalog had said that Tesla's cars come with all the hardware needed for FSD and don't cost an extra $15,000. He seemed to suggest the hardware is included as standard on all Tesla cars, and so it will be less of a struggle for Tesla to eventually get a hold on full self-driving technology. A lot of Tesla investors still believe that the competition in the EV industry is getting too big for Tesla. For years, Tesla has stood out as the leader for electric vehicles. However, the company now faces a growing slate of deep-pocketed competitors, including General Motors, Ford, and Mercedes-Benz, who are all looking to disrupt its market dominance. Will Tesla keep its leading position in the EV industry? Keep watching to find out. But before we get into it, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Tesla has been a dominant force in the EV industry for so long, but there are a lot more things going on in the competition way of things. And not only with EV cars that are pretty luxurious, but with mainstream vehicles that come in different body types and price points. A data firm recently found that Tesla's market share of new registered electric vehicles in the US stood at 65% through the third quarter of 2022, down from 71% the previous year and 79% in 2020. S&P also forecasts Tesla's EV market share will decline to less than 20% by 2025, with the number of EV models expected to grow in the coming years. The S&P stated in the reports that, given the growth in consumer choice and consumer interest in EVs, Tesla's ability to retain a dominant market share will be challenged going forward. Tesla's position is changing as new, more affordable options hit the market, offering a similar technology and production build as Tesla. However, despite this, the car company leads all others by a significant margin. The automaker sold slightly over 936,000 units by 2021, which gave it a market share of nearly 14%. Tesla is poised to lead in the EV race in 2023, even though there are concerns about its car demand. According to Morgan Stanley analyst Adam Jonas, 2023 is shaping up to be a reset year for the EV market, where the last 2 years of demand exceeding supply will be substantially inverted to supply exceeding demand, and that shift will largely benefit Tesla. Several investors are yet to fully believe that there will be enough high demand for electric cars in the near future, but the reality is, these cars are fast becoming popular, and many people are starting to see the importance of owning one. According to the US Department of Energy, electric vehicles are more energy efficient because they convert over 77% of electrical energy into power at the wheel. That's a big contrast to gasoline-powered electric vehicles, which convert 12 to 30% of the energy stored in gasoline to kinetic power. Likewise, EVs are an environmentally friendly way of doing things. A significant draw of EVs is their ability to limit environmental impact while driving. If the electricity consumed by a vehicle is produced by a nuclear, hydro, solar, or wind source, then the vehicle emits no pollutants, which is often the opposite of fossil fuel-powered electricity sources. Also, when compared to gasoline-powered vehicles, EVs tend to have a lot more of a limited range. Most EVs can travel at least 100 miles on a single charge, while some can do 200 or 300 miles per charge. Overall, it's usually a bit more limited than the gas-powered option. Several factors are also promoting the sale and demand of electric cars, especially governments who've already offered incentives for EV buyers, and those include, among other things, tax credits and lower interest rates on EV loans. Many investors overlook the potential of Tesla gaining massively from the growing EV market, but instead have focused on the impact of Musk's Twitter purchase on Tesla. Wedbush analyst Dan Ives had previously stated in a report that Twitter remains a nightmare for investors because Musk has been using Tesla as his own ATM machine to keep funding the social network. However, that soon may not be the case. Many fail to see that Twitter can actually help Tesla in many ways. First, the social media platform can help Tesla to stay up to date on trends on their EVs. Tesla can also use Twitter to connect with customers and answer their questions, as well as share photos and videos of latest products and news about the car company. Tesla can also make significant use of Twitter's database to grow its business. Only a few investors have figured out that Musk did not only pay for Twitter, but he also actually paid for the company's data. Twitter has approximately 450 million monthly active users as of 2022, so imagine how much data Elon Musk will get access to by owning Twitter. Besides wanting to implement his vision for Twitter to become the platform for free speech, Musk also wants Twitter to help market his other companies. Social media users are at the mercy of the algorithm, which extracts data about them and then uses that information to keep them on the site for as long as possible, earning the social media sites more money through advertising. Musk can then use this data to influence the market for his companies, both Tesla and SpaceX. Musk is also the CEO of Neuralink, a company that's developing implantable brain-machine interfaces, and so he could use the data from Twitter's algorithms to market this company as well. Generally, Twitter could be seen as a great marketing tool for Elon's companies. The Tesla CEO is entering the market that has great power in terms of algorithms, and so he's likely to benefit hugely from this. Twitter will also be useful for getting customer profiles to use in products like Robotaxi. Likewise, Tesla could use some of Twitter's data to build out the Tesla bot. Musk has already promised that in the long haul, Tesla would benefit from his ownership of Twitter. And while there may be a bit of doubt about this, it is something that's worth paying attention to. Longtime Tesla bull Cathie believes that Tesla is on a path to enormous success, and that will significantly affect the company's stock price. Cathie Wood's firm, ARK Invest, has been buying Tesla stock despite the continuous drop in stock price. According to Wood, there are several factors that could make Tesla go up in the future, such as the automaker's expansion plan in areas like robotics, AI, and energy. Cathie Wood also believes that deflation will be a great tool for Tesla, as it will create room for innovation. Wood stated that the automakers are likely to struggle following the creative destruction caused by deflation. Companies that are running their shares in the short term with less investment in innovation may find it difficult to keep up with the coming market challenges. Likewise, automakers with products that can become obsolete will have to sell these commodities at a discounted price, or risk incurring a massive loss. Cathie Wood has said that the drop in demand for oil will drive the growth of EVs, and gasoline cars may gradually become obsolete. As the cost of gasoline continues to soar, this has helped to foster the shift to electric vehicles. Although gasoline prices are trending back downward, more individuals and businesses are looking to electric power as the future of transportation. Tesla's solar business is also another potential driver for the company's growth. In 2021, the company reported $801 million in revenue from its energy generation and storage businesses, which includes three main products: solar, its Powerwall storage device, as well as its Megapack. Although Tesla has not been fully focused on its solar business, there's still opportunities to fully optimize it in the future. If Tesla is able to give more attention to its solar business, then it could be a huge driver for the car company to grow into a multi-trillion-dollar company in the next 5 to 10 years. Do you think Tesla stock is still a once-in-a-century opportunity that investors shouldn't miss out on? Let us know down below. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.